Welcome to Retirement Ramblings. I'm Scott, and today is day 50 on my countdown to retirement. So this morning, before I had my morning meetings, I was checking on Seeking Alpha, and I saw this note that U.S. natural gas futures for December had closed up 5.2% to $4.56.5 per 1 million British thermal units, its highest close since December 28th, 2022, presumably because we got an early cold snap. Then I talked with my sister as my mom went to get an injection this morning in an attempt to alleviate pain that she has in her back and both legs. The doctor ended up saying that she's got arthritis across her whole back and she has a pinched nerve that goes down both legs. So she got this injection of cortisone. And when I spoke with my mom, she was, resting, quote unquote, comfortably with an ice pack around the injection site following the procedure. And, time will tell whether or not it actually alleviates the pain. But she was able to move her leg in a certain way and bend her knee in a certain way that she hasn't been able to do previously without pain. So, hopefully that's a good sign. Then, at lunchtime, I didn't make anything for breakfast, and so when lunchtime came around, I boiled 2 pounds of shrimp in Old Bay seasoning, and then I cooked a 12-ounce package of bacon, and then I set that aside for my wife and I to eat, and I thought we would have leftovers given the visible quantity of food, but my wife and I devoured it, so no leftovers were had. And then I did my weekly shopping list. And this week looks like it's going to be pretty much a Kroger only shopping experience because none of the other stores had any of the stuff that I wanted. And at Kroger, they've got boneless chuck roast for $6.99 a pound, 80/20 ground beef for $4.99 a pound, but it's in a 3-pound roll. Kroger's hickory smoked spiral ham for $2.49 a pound, Bob Evans breakfast sausage for $3.50 each, Smithfield bacon at $4.99 each, and then on Saturday through Monday, they're running a special on Cook's portion ham at $1.49 a pound. I don't even know what that is, but I'm going to check it out. Then I watched during the day. I ended up watching recordings of both the halftime report and closing bell on CNBC, and the Dow Jones Industrial Average closed above 48,000 for the first time ever today, so that was interesting. One thing that I thought I would mention, and just blows my mind. So if you're an investor in Invesco's QQQ, you have been getting bombarded with traditional mail notices and phone calls trying to get you to vote on their proxy vote for changing the structure of the triple Qs from a unit investment trust to an open-end fund. And they're basically saying, the value to you as the investor is you're going to save, I think it's 20 basis points on the fee structure. So instead of 0.2% fee, it's going to be 0.18. And then they go on, if you read the whole proxy statement, to basically explain the different flexibilities that they'll have if you move to an open-ended fund. Given the amount, I have gotten no less than a dozen mailings of duplicates. I mean, the amount of money they are spending in paper and in telemarketing to call and harass people is unbelievable. So from my perspective, there can't be any possible way that this is good for the investor. It's good for Invesco. So otherwise, they wouldn't spend near the amount of time. And they also delayed the meeting, presumably because the proxy voting is not going well enough that they'll get for them to get what they want. So anyway, I don't know if you've been experiencing that, if you happen to own the triple Qs, but if you do, drop me a note in the comments and just let me know. I'm curious to see how many other people are getting bombarded by this, because like virtually everyone I know that owns it has been just hassled to death for the last like 8 weeks. All right, anyway, moving on. So I continue to work on rebalancing my portfolio into year end, and to that end, I entered a bunch of sell orders to try and trim positions to get them to be 5%, no more than 5% in my portfolio, so I can then take the funds from that and redistribute into other areas of the market that I think will have better exposure for the long term. And also, you know, while I've been working, I spent a fair amount of my time, I certainly don't day trade, but I spent a fair amount of my time trying to grow my portfolio in advance of retirement. Once I get into retirement, I'm not gonna have any, money coming in from employment. That if I make a bad decision or something, it would, have a material impact. I'm not going to be doing that. So I'm trying to get stuff positioned into long-term things that I don't believe that I'm going to have to um, sell or rebalance, other than maybe annually I'll make a change. But I'm really trying to get stuff into long-term positions that I think will be good for the next 5 to 10 years. So that's that. So one of the things I was doing today was I was playing around with Grok, and I was asking it a variety of questions to help with retirement planning. So one question that I asked was, because we've just prefaced it by saying, I know what the CPI is, and I see how the CPI tracks, and if you're Medicare eligible, sorry, that's not true. If you're Social Security eligible, right, so you're 62 or older, you know that CPI and the cost of living adjustment for Social Security for 2026 is 2.8%, which is supposed to keep retirees, basically getting a cost of living adjustment to be able to continue to, maintain the same purchasing power with their retirement income. Well, that's a fallacy for sure. But anyway, so I was asking Grok, I said, and I'm quoting here, so I'm going to look down. Disregarding the CPI, what has been the effective inflation rate in Georgia, which is where I live, when you consider food, which they know, food, fuel, so energy and food are usually excluded from the core CPI, but you consider food and fuel, medical costs, utilities, housing appreciation, and property taxes. And Grok's answer was, focusing solely on these factors, the effective inflation rate, a weighted average reflecting their typical share of household budgets, example, 50% goes to housing and taxes, 20% to food, 15% to utilities and fuel, 15% to healthcare, is estimated at 6.8% annually from 2020 through 2024. This is calculated from state-specific data on price indices, expenditure surveys, and local reports. The cumulative increase is approximately 38% over the period, eroding purchasing power more than the CPI would suggest. Food was up 5.2%, fuel was up 4.8%, medical costs were up 7.5%, utilities were up 3.9%, housing appreciation was up 8.5%, and property taxes were up 7.2%. So why is it higher than the CPI? Well, the CPI uses a broader basket, and apparel was down 2%. Essentials like housing were 32% of the CPI weight, and food was 13%, have been outpaced, especially in Georgia, with growing population, which is up 4.4% since 2020. And then it went on to say that the outlook for 2025, at the end of the year, what they're expecting is it's going to ease to be only somewhere between 5 and 6%, with stabilizing energy and the new property tax caps that voters approved in 2024 in Georgia. But healthcare and fuel volatility will persist. Excuse me. So I then said to Grok, well, again, this has to do with trying to figure out in my bucket strategy exactly how much money I want to leave in cash. Because as you guys know, if you've watched for any amount of time, I have a 70-30 bucket in my IRAs. I have an 80-20 bucket, allocation. I have an 80-20 allocation in my Roth, and I have a 70-30 in my IRA. So that bond allocation, if you will, or that fixed income allocation is really a cash portion that I can tap into, without having to sell stocks. So obviously, I care about what that ratio is and how much cash I actually have to keep out of the market, to make sure that I don't have to worry about selling during a downturn and having, sequence of return risk, especially in that first 5 years of retirement. So I specifically said, what's the longest bear market since 1961, which is my lifetime, so since I was born? And the answer was the 1973-74 stock market crash was the longest bear market since 1961, lasting 23 months from January 11th, 1973 to October 3rd, 1974. It saw the S&P 500 drop 48% amid high inflation, oil crisis, and recession driven by events like the OPEC embargo, while the 1968 to 70 bear market lasted around 21 months with a 36% decline, and then 1980 to 82 was 20 months and declined by 27%. The 73-74 downturn holds the record for the duration of the period. So I'm like, okay, how long did it take the market to recover from the bottom in the stock market crash of 73-74 to reach a new high? So the whole cycle, from the time it dropped to how did you get back to basically where you were? And, basically it said to avoid selling stocks during the entire cycle, bear market plus the recovery, a cash bucket covering approximately 8.5 years of net expenses would have been needed. 23 months for the bear plus 69 months for the recovery. But standard bucket strategies use 1 to 3 years of cash, refilling from stocks after a partial recovery. And then I said, well, how much cash would I need to cover the entire cycle? And so it said to fully cover the entire 73-74 bear market cycle from the peak in January 1973 through the bottom of October 74 and all the way to the full recovery, which didn't happen until July of 1980, without ever selling stocks, you would need to fund 8 years and 6 months of net expenses. It then went on to say, in 1973 and 74, though, the market fell 48%. Then it rallied 75% from October 74 low to mid 76. So you could have refilled cash in 1976, 1977, well before the full recovery in 1980. So it went on to then say, you need 3 years of cash would have been sufficient in practical terms to get you through without having to sell and lock in losses. So for me, I find AI agents extremely helpful in helping you think through retirement plan assumptions. And while the input's helpful, you still need to do your own due diligence, right? Because they do make mistakes, right? But I strongly suggest, trying out one or more, to challenge your thinking. And also, you can compare one against another, see if you get the same answers. So anyway, I think that would be helpful. And then, after playing around with that, for dinner, today ended up being like a seafood day for me, right? So I had the shrimp earlier in the day. And then for dinner, I ended up making a package of mussels, which ended up being like 24, 29 mussels, something like that, along with a small package of snow crabs that my wife and I split. And then she had part of her roast. So she had a kind of a unique surf and turf. So anyway, that's my update. Love to hear your thoughts on any of the things that I just went over with regard to Grok or any of the other financial components that I mentioned. But kind of that's everything for today. So if you have any questions or comments, please leave them in the comment section down below or drop me an email at myretirementramblings@gmail.com. Otherwise, I hope you have a great evening, and until tomorrow, take care.